Hey everyone, it is about 2:37 on Tuesday afternoon, April 30th. Obviously, this is a little bit later than we normally do it, and I'm recording this and we're not doing this live because I had a couple of things I had to take care of. I couldn't watch the market close. So let's take a look at how we actually closed. We were trending downward pretty hard during the day, and let's see how well we reacted to those levels that we identified in the morning session. So SPY down, way down. After markets even way down. So we got the direction that we were looking for. We said we wanted to get out of this 508.5 to 510 region and either break definitively above it or come down. And if we came down, we'd come down to the 505 and then head down towards the 500 level. So that's actually what happened. We broke out of that region. We traded down and we reacted to the 505 level. We traded back up to that MA200, and then during the last hour of the day or so, we hugged that 505 line until at the very end of the day, we started trending way back down, and now after markets, after hours, we're pretty close to the 500 level. We're at the 501 level right now. So we definitely got that directional move that we were looking for. We said that we should move at least to the 500. I didn't think we'd get to it in a single day, but it looks like we did. So definite bearishness coming down. Look how big that bar is today with plenty of volume, and we're headed down pretty close to that 500 level, that MA90 level. That's making it a lot more likely that we could break down through and start getting that -10 correction that we've been talking about. So chances have just increased that that's exactly what's going to happen. Now, we do have to get past the MA90 and this 500 level first, but that could, well, almost assuredly we can touch that number tomorrow. And then depending on what Powell says in the FOMC, we do have a lot of earnings still, and this could bounce or move across the 500 level, stay at the 500 level for a little bit, and then pick a direction. But as of right now, the higher probability is to reach that MA90 and then more than likely move downwards. Let's look at our QQQ. QQQ, same big large red bar. DIA, also big large red bar. So at least at the surface level, it's looking broad-based. It doesn't look like it is necessarily concentrated in a single sector or a cap, market cap size. Small cap stocks also moving quite a bit. The bar doesn't look as extreme, but it still moved quite a bit. So let's see if VIX, it showed up in the VIX. Yeah, so we moved up quite a bit on the VIX, and I'd be a little bit more leery if this was a larger bar. This is like an okay size bar. It's on the cusp of being worrisome. If we had closed more towards the top of, or the high on the VIX, or even a little bit higher, then I'd be like, okay, we're definitely moving downwards and breaking down through that MA90. As it is, we could just hit that MA90 and then we'll have to see from there. See what our bonds are doing. So yeah, we're just chopping back and forth like we said this morning. Really, the most important things that we're going to want to look at are the FOMC press conference, not the rate decision, but the FOMC press conference when Powell is going to speak. What he actually says out of his mouth is going to be really important. And then everything else is just going to be kind of moot. We did have a lot of big important earnings after market today, and there will be more before market tomorrow. Let's just take a look. After market today, by market, Amazon, AMD, SYK, Stryker, and then Starbucks. Let's take a Mondelez, RSG. We've got a lot of really big ones, but you can see in terms of market cap, though, really RSG or Mondelez really is where we kind of stopped carrying. But some of these are pretty large names that are well followed and and are commonly known and commonly traded. So they'll have an effect as well, but not as big as like I said, SMCI, that was really big. So let's take a look at some of these, see what we got out of them. Let's just go down the list in terms of market cap. AMZN, Amazon positive earnings. And then we don't have, oh, Post, yeah. So back up to the MA50 in the post market trading. So up, but not hugely up, and definitely not a big gap up like we saw in some of the other names like McDonald's. McDonald's gapped down this morning, but traded all the way back. That's really interesting. That's really interesting to note. So what that's telling me is that we are starting to buy defensive sectors, it looks like, maybe. We'll have to confirm that with a few other names. Let's check out CL, yeah, Colgate-Palmolive, a nice consumer staple. Let's look at Procter & Gamble, nice green bar when the SPY is down quite a bit. So it looks like money did move into more defensive sectors, and that would imply that the market is expecting further movement downwards. So we definitely are biased to the downside as of everything that we've looked at so far. Let's continue down the line. AMD, SYK, Starbucks. Gap down. Movement upwards, gap up. Starbucks. I can't tell. Let's see, SBucks. Down, way down. Okay. So I wonder why I didn't show. Oh, okay. I didn't look low enough. That's why I didn't see it. Wow, a huge gap down on Starbucks. Okay, so far we're looking at a definitive negative bias after earnings in these larger cap stocks: Mondelez, RSG, SMCI. Down, down, and down. Okay, so we definitely have a negative bias due to earnings. That's why we're seeing this sell-off in the aftermarket. Okay, a very large sell-off in the aftermarket due to not so great earnings happening. So we definitely have a strong downward movement and negative bias in the market. That's what we're looking for. We got a lot of movement today, but there's still more room to go. And now that is definitely a confirmation bar. I would see if we could get a little bit of relief, maybe back up closer to that EMA 8, or like the high of this day, or at the very least the open of this day, but before getting into any shorts. But basically on a pullback, if there's any stocks that are pulling back before the S&P 500, those would be the ones to go in. But we're definitely looking for short opportunities in this market now. And I was saying that this morning, yes, we did have a higher probability of us moving down, but the margin of error was a lot greater in this environment because of all the uncertainty from the earnings and from the economic or the FOMC meeting. And we got the higher probability event actually happened, and it moved really, really big. I was saying how, hey, if we move, that it's not a big deal because there's going to be more room to go. And yes, there is more room to go. Maybe not as much as we would like, but there is more room to go, especially if we break that MA90 and start getting that -10 correction. So now is the time to start getting into some short positions in the market, or we could go into some really strong stocks that did really well despite this downward movement, like some of those staples that we just looked at: Colgate-Palmolive, Procter & Gamble. So let's take a look at our sectors and see how those all played out. Healthcare, staples, utilities, the most conservative sectors are the ones that did the best today. And what do we mean by the best today? The least negative. So the healthcare just flat, basically minus 0.07%. But XLP, XLU, overall, the overall sector and index went down, just not nearly as much as some of these other ones, like energy down 3%. The consumer discretionary down 2.43%. Technology down 2.2%. The conservative ones just didn't go down nearly as much. But of course, there were some individual stocks that actually went up, like we saw a little bit earlier. So let's look at individual stocks and see what we might be comfortable with in terms of strong stocks and perhaps going long. We wouldn't go long naked. It would be a pair trade or a long and a short pair. But we definitely want to start leaning our portfolios to the downside. Okay. So we can see that some did quite well. Aerospace, so defense as in war defense, but also a defensive sector. Healthcare, they had earnings, so they still did very well. Train, business services did well. I wonder if they announced earnings. Yeah, they announced earnings as well. So it looks like a lot of these exceptions are because they announced earnings. GLW announced earnings. Zebra, ZBRA also announced earnings. So the ones that were able to defy the index and make a gain on the day looks like it's because they gapped up because of earnings. So that doesn't give us a lot of confidence. That doesn't mean there's a lot of strength in this market. And it's not necessarily sector based, it's kind of individual stock based on their own earnings. Every single one of these I've looked at so far have had earnings released just today or yesterday afternoon. So you can see this one was yesterday afternoon, and so today was the jump up reaction. So every single one of these that was able to go up today were because they had earnings, and it's not because of one particular sector. So we have broad-based downward movement. As we indicated when we looked at the sector level, basically the best performing sector was down 0.07%, and the next best performing was down 0.40. So we have some sectors doing better than the others. The defensive sectors are doing better than the others, but those were still down, and all of this is very bearish. So we're definitely going to start leaning our portfolios bearish. If we do take a long trade, we want to have it balanced by a short trade for sure. Okay, so that's all we're going to look at. What do we have for the immediate future? We have a continued downward motion to that 500 level or to that MA90 level. And then from there, we'll have to see, but as of right now, the higher probability is a continuation down below that MA90 into the correction territory, which means that we're going all the way down, maybe all as far down as 475. That's what I'm going to be preparing for as the highest probability situation, although we could bounce or we could chop sideways for a little while. So it's not a guarantee that we're headed down and getting that correction, but chances are pretty good. They're definitely in our favor or in the favor of going to the downside. So 65% to 70% at this particular point in time. All right, so that's going to be it for today. Basically, we got directionality. That's what we're looking for. We're going to get volatility due to the FOMC minutes tomorrow, but even if whatever they do changes the trajectory of the market, it's likely only going to do it for a day or two, maybe 3, unless what they do is cut rates unexpectedly. If they actually take action, not just talk about things, if they actually cut the rates tomorrow, then we will see a reversal to the upside, and then all bets are off at that point. Anything that I've said or anything that we've looked at before or get invalidated, and then we have to reevaluate everything from a new lens. So position yourselves, get ready for a potentially very volatile day, but overall we're expecting everything to move downwards. I'm going to leave that here, so have a wonderful rest of your day, and I will see you tomorrow in the